What is valuation of shares? In the cases of shares quoted in the recognized stock exchanges, the prices quoted in the stock exchanges are generally taken as the basis of valuation of those shares. However, the stock exchange prices are determined generally on the demand-supply position of the shares and on business cycle. The stock exchange may be linked to a scientific recording instrument which registers not its own actions and options but the actions and options of private institutional investors all over the world. Importance of valuation of shares. The importance of valuation of shares can be understood from the following. When a public sector undertaking is converted into a limited company by means of public issue of shares of such undertaking, valuation of these shares becomes essential. Purpose and need of valuation of shares. The need for valuation of shares may be felt by any company in the following circumstances: for assessment of wealth tax, estate duty etc. Amalgamations, absorptions, internal reconstruction schemes. For purchase and sale of private companies and other unquoted shares. For converting one class of shares to another class. Advancing loans on the security of shares. Compensating the shareholders on acquisition of shares by the government under a scheme of nationalization. Acquisition of interest of dissenting shareholder under the reconstruction scheme. For the valuation of shares held by a trust or an investing company. Factors affecting valuation of shares. The value of share of a company depends on so many factors such as dividend policy of the company. Payment of dividend plays an important role in the valuation of share, where an investors hold bulk of shares in a position to influence the rate of dividend. Therefore, distributable profits play an important role in the valuation of shares. Financial ratios. A company having better financial ratios such as current ratio, debt-equity ratio, ROE is always favored by the investors. Nature of business. Nature of company's business affects the value of shares a lot. If company is doing a business having better future growth, have positive impact on value of share of the company. Record of efficiency, integrity and honesty of board of directors and other managerial personnel of the company. Quality of top and middle management of the company and their professional competence. Record of performance of the company in financial terms. Economic policies of the government. Demand and supply of shares. Rate of dividend paid. Yield of other related shares in the stock exchange, etc. Net worth of the company. Earning capacity. Quoted price of the shares in the stock market. Profits made over a number of years. Extent of competition. Future prospects of the company. Dividend paid on the shares over a number of years. Prospects of growth, enhanced earning per share. Availability of reserves and future prospects of the company. Realizable value of the net assets of the company. Current and deferred liabilities for the company. Methods of valuation of shares. The issues relating to the valuation of shares may be discussed under the following broad heads. Net asset method. Yield method. Dividend yield. Earning yield. Fair value method. Net asset method. This method is also called as assets backing method, real value method, balance sheet method or breakup value method. Under this method, the net assets of the company including goodwill and non-trading assets are divided by the number of shares issued to arrive at the value of each share. If the market value of the assets is available, the same is to be considered and in the absence of such information, The book values of the assets shall be taken as the market value. Value of share equals net assets, number of equity shares. Applicability of net asset method. The permanent investors determine the value of shares under this method at the time of purchasing the shares. The method is particularly applicable when the shares are valued at the time of amalgamation, absorption and liquidation of companies, and this method is also applicable when shares are acquired for control motives. Provisions of various tax laws, wealth tax rules, provide for this method valuing the shares. Disadvantages of net asset method. 1. This method applicable in case of liquidation of company. 1. Since company is treated as a going concern and where there is no possibility of its liquidation in the near future, this method is far from reality. 2. This method does not take into consideration the profit of the company. 3. Due to personal bias, it is difficult to calculate market value of assets. This method ignores various factors such as financial ratios, nature of business, management of company, future prospect of the company which have impact on value of shares. Dividend yield method. Under the dividend yield method, the emphasis goes to the yield that an investor expects from his investment. The yield, here we mean, is the possible return that an investor gets out of his holdings, dividend, bonus shares, right issue. If the return is more, the price of the share is also more. Under this method, the valuation of shares is obtained by comparing the expected rate of return with the normal rate of return. The formula is, value of share equals, expected rate of dividend, normal rate of dividend, times paid up value of share. Earning yield method. The main drawback of dividend yield method was that valuation of share depends on actual dividend declared by a company and also ignores the earning capacity of the business. Sometimes better managed companies retained their earned and distributed in later in form of bonus shares, so it is appropriate to value the share on the basis of company's earnings rather than dividend. Therefore, in earning capacity method, rate of earning of company is compared with normal rate of return prevailing in a similar industry. The formula is, rate of earnings equals, profit earned, capital employed, times 100. Value of share equals, rate of earnings, normal rate of return, x paid up value per share. Average method. None of method discussed earlier give a true and fair value of the share due to much difference in the value of share calculated by different methods. Therefore, it is suggested that valuation may be done by any two methods and be averaged to find out the value of share. This average value is considered fair value of the share.